Hey, so I wanted to focus on XLK. This is the technology sector. Last time we looked at them was the end of May, so about 2.5 weeks ago at this point. Whenever we looked at them, it was trading at 165. We had buy points marked at 140 up to 157. Also seeing resistance at 157, so that was kind of a interesting spot for us. And then we also had resistance at 173. We also noted that this sector is primarily driven by Apple and Microsoft, making up 45% of this sector, also in this uptrend for the past 7 months. So, what I'd like to do is just go into some news about this one. Did a little digging. I found something that I thought was just interesting, wanted to share it. Then we'll go into the technical analysis, see what updates we want to make, any kind of tweaks or modifications, and then we'll wrap up with just kind of like a quick summary. So when I'm kind of presenting this, if you have any questions or want to add any insight that you have from your point of view, feel free to leave a comment below. But with that said, let's just look at the news, see what has come about here. So XLK, technology. This is really the only thing, and it really just focuses on one stock, but of course this one stock is going to impact XLK. And so this Palo Alto Networks, it's going to replace Dish Networks as part of the S&P 500, and it's also going to join XLK, and apparently this is the 6th edition to the index this year. So it goes on by saying companies often see their stock rise upon inclusion in the S&P 500, which makes sense. I mean, I really haven't heard of Palo Alto before, but it's a pretty big company. But with them being included in the S&P 500 or the XLK sector, anyone who buys these indexes or ETFs, they're now going to be buying a portion of Palo Alto, which is going to drive the stock price up higher. And that's just due to affiliation, really. So they're in the cybersecurity sector of technology. And then what else do we have here? The rise in Palo Alto Network stock comes as concerns over spending in areas like cloud computing, which had pressured markets last year. So yeah, again, they're in cybersecurity, so this one might be worth a look. I did pull up their just a quick glance at what they're doing. They're currently at 246. I'm not a big fan of this. The P/E ratio above 300, 367. That's crazy. They've been on the rise though. I mean, just in the past month, they've seen $50 increase, which for them is like more than 25%. This article came out right around here. So this might have been announced before, but since that article has been released, they've seen another $20 increase in price. Maybe if this was lower, I would consider it, but they're just too new. I'm just not looking into that right now, but potentially this one could grow pretty quickly. So just something to think about. But that was the news aspect. Like I said, not much there. So looking at the technicals, and we'll zoom in a little bit. So again, the last time we looked at this stock was midweek here. So this really small sliver here. That was the last time we looked at them. Since then, kind of traded flat, but we did see a pop this week, reaching 173. 173 was one of our resistance points. We also said 157. Whenever I looked at them last time, the fact that it passed 157, that to me was like a red flag. And the fact that they were already so close to 173, our secondary resistance point, to me, I just didn't think it was a good time to buy. I still kind of feel that way. I think this one's, I don't know if it's necessarily overvalued, but I just feel like there's going to be other opportunities out there. I think technology is, it's tricky because clearly it grows very quickly and that's kind of expected. But for how quickly it's growing without much news, I mean, it's just, it's getting to the point where I'm not having confidence in this point, this price point today. If it pulls back uh, in somewhat of a dramatic way, yeah, I'd probably add on to it. And even when it drops, if you dig into it, I'm sure we'd find that it might still be technically overvalued. But you know what? The growth opportunity is so strong that that's why you kind of just take it for what it is. So I just want to make a couple updates here. This yellow line, I'm just going to remove that. That was basically, it was drawn in because we saw some sort of pattern here forming, and we thought that would continue. It ultimately didn't, and then we kind of tweaked it a little bit to show what it was actively doing. And so we thought, okay, maybe now it's going to pull back and kind of hang out in the upper half of that uptrend. Well, it's proving today, after another week, that that is not going to be the case. It's just going to continue going upwards. So we're just going to remove that until, well, we're just going to remove it. So our short-term uptrend, which was, as we mentioned in the beginning, of this 7-month uptrend condition, that is still in effect. It's just grown a lot more quickly. And so I guess just to fit the narrative, what we're going to do is we're just going to play with this number a little bit, or this range, to see can we get it to kind of make sense to us. So I'm just going to elevate it up a little more. And essentially what I'm doing is, previously I was using these dip spots as like the low, which, I mean, what we could do is just kind of expand the range out a little bit to be like that. So we have a lower bottom, and in terms of the top, I think that's fair. And the reason I'm not going to make this go any higher, at least right now, is because that upper range point that we have here, I mean, that's hitting one instance, two, and I mean, these two in the middle here, I mean, that's even giving them kind of a decent sized buffer where we could bring it back down to here, and that would probably be more ideal from whatever, November till about just last month. But then all of a sudden, this past month, from like mid-May till now, mid-June, this acceleration, I don't like it. But because it's growing so rapidly, I am going to give it a little bit of cushion. So I'm going to raise it to there, which catches this high, more of that high. But as we're seeing, I mean, it's out of that uptrend, and I don't like that. And then, of course, it's at that 173. That was previously all-time highs, 173. We're now at that point again. I think we're going to find out very quickly next week what this one wants to do. What we've seen in the past is whenever a company hits, or in this case, sector, I guess that'll be the unique aspect of this, is that this is a sector. It's not an individual company, it's a sector. And maybe we'll get the answer once we circle into Apple and Microsoft. That'll be kind of more insightful into what this one's going to do in the near term. But this one is at all-time highs. And so where I was going with this is, what we've seen with individual stocks is when it hits all-time highs, it can rally very quickly because there's no there's nothing stopping it. There's no indicators of when it should stop, and because it's hitting these new highs, it just rallies off for another 10%, 20%. It can rally and make big moves like that. And so that is one scenario that this one could do. I don't think it's as likely because, again, this is many companies that are involved. So some are likely going to pull back or not allow it to run as quickly. But we'll see. And then alternatively, we're right at that point, 173, like almost on the nose. We're at 173. So the alternative is it's going to get rejected. And as far as we can see, the worst that it can do at this point would maybe be come back to like 150. That would be the worst. I think even more realistically, it maybe would pull back into the mid to low 160s, so not much. But this uptrend is still intact. There's not really any change in that. Honestly, what we might start doing is remove some of these consolidation channels, meaning the green line, the blue lines, and the red. They were nice when it was kind of in those range points for about a year, close to 2 years, but it's now growing again. And when it grows, I mean, we're zooming out about 10 years. It just can grow very rapidly. And I'll zoom in a little bit. So this is maybe like the past 5-6 years. Probably want to remove these purple uptrend, but I'll leave it in for now just to show that this one could still pull back very dramatically, back into like the 120s, and we could still say it's in this uptrend. So I just will keep it in for a little while longer. But ultimately, I mean, that would be the ideal, is we want this to pull back all the way to this range, which would, again, be in like the 120s, maybe the 130s. Any like severe dip, it's always been a good spot to buy, especially for the past like 6 years. If we just zoom in, I mean, here's one severe dip that turned out to be a great spot. Another one, great spot. Most recently, here was a severe dip, and even then, it didn't break that uptrend channel that we drew in, but it was very severe in terms of where it has been heading. So yeah, I think that's really all I wanted to say about this one. So just to update the tracker here, so it went from 165, currently it's at 173. I'm still going to leave this one red. It's at resistance. I realize there's an opportunity that this one might shoot off another 10, 15, potentially 20%. But again, this one's going to be highly driven off of Apple and Microsoft. So to kind of confirm that, I would want to look at those. So just to give you an idea, in terms of buy points, we had 140 and 157. For me to get into this one, the earliest I would consider is probably 150. So I'm going to update this to 150. The ideal spot for me, at least like now, would be closer to like, I would say I'll just keep a round figure, 130. So 130 and 150 at this point. Well, I guess the real number is 130. That is like the ideal. So I'm making that one bold. Resistance, 157 and 173. At this point, I guess 173 makes more sense. So we'll make that the bold figure. Not much weight is going into those 2 points based on the uptrend it's in. We can update the date here. The note will keep the Apple and Microsoft at 45%. And then the uptrend. So that's been going on since, okay, we can make it 8 months at this point. I think one other thing that we can look at, so going back to the tracker, before I do the wrap up here, so if we go to the ETF concentration here, find XLK. Okay, so I didn't do this. So this is new. So in terms of XLK, we already follow 4 of these companies, so we should have a good sense of what this one does. And in terms of Microsoft and Apple, they make up 47%. So we had 45, they're now at 47. So that kind of gives us an idea that those 2 companies have done very well. I don't know if they're meant to stay at 45%, but they're now at 47%, which lets us know those 2 companies have been doing very well since the last time we looked at this. So maybe a month, 2 months ago, they've improved their holding, which means they've done well, and that kind of makes sense now. But yeah, just to quickly wrap this up, so XLK currently it's at 173. Right now, I'm looking for a big pullback. Otherwise, I'm not really interested in buying the sector as a whole. Individual companies within it, yeah, I might find one here, one there. We'll find out. So buying, ultimately, I would like 130. 150, I would consider it. And resistance, we have 157 was a point, but 173 is the new point of I want to see what happens there. And then, of course, our note here, driven by Apple and Microsoft, and it's been in this uptrend for the past 8 months. And of course, if we look at it from a wider angle, you can see it's been in an uptrend for a very long time. It's just the uptrend keeps accelerating. And so we're in that uptrend of 8 months where it's like high acceleration. If it pulls back into that lower uptrend, that would be more ideal. And that's where that 130 comes into play. But that wraps this up. Again, if you have any questions or want to leave a comment, let me know. Otherwise, please like, subscribe, and I'll see you on the next one. Bye.